Right, everybody, welcome to another live stream. We have some pretty significant news going out today. Obviously, a stock that we've talked about a lot in the last few months, AMD, and it finally got its Oracle moment, struck a pretty significant deal with OpenAI. So this is, excuse me, obviously, this has taken over most of the attention this morning, and we're going to be breaking down, first of all, the recent deal with OpenAI, what this means potentially in terms of revenue. I'm going to also break down a bit, just my thoughts on the company, and then we're going to move on to some other thoughts that I've been having lately. Of course, with all the AI mania, obviously a lot of people worried about the market topping. We're going to address some of these ideas, and lastly, of course, we're going to look at some interesting trade ideas. So stay tuned. Uh, so let's get started. Obviously, first of all, with the AMD news, obviously very bullish. The stock is up 27%, which obviously is huge for a company like this. Again, pretty similar to what we saw with Oracle. And as you know, guys, we've been pretty staunch proponents of AMD for a while. I called it the next trillion-dollar company. As you can see, we have a pretty bullish track record here on Seeking Alpha, talking very in depth about the stock. And it seems like it's finally got that recognition that we were expecting, right? I mean, it struck a deal with OpenAI. So let's break down what this deal was exactly. First of all, the company decided to they agreed to deploy 6 gigawatts of AMD GPUs, and these will be the AMD Instinct MI450 series. I actually talked about these in my most recent Seeking Alpha article and how they are expected to be equal to, if not even superior to to NVIDIA's GPUs. So, in terms of the deal, like we said, it's a 6 gigawatt deal for data centers. Starting 2026 will be the first gigawatt of deployment, and it's hard to estimate exactly the revenues. The company AMD has said it could be worth with tens of billions. I'm actually thinking more hundreds of billions. 1 gigawatt of energy. If you look at some of the estimate by OpenAI is actually a lot closer to maybe 50 billion. So again, 50 times 6, that's about 300 billion potentially being deployed over the next 5 years. So very bullish for AMD. However, here is kind of a caveat, the kind of interesting thing about this deal, which obviously has raised some eyebrows, and we should take some time to talk about. Okay, so as part of the agreement, to further align strategic interests, AMD has issued OpenAI a warrant for up to 160 million shares of AMD common stock, structured to vest as specific milestones are achieved. The first tranche vests with the initial 1 gigawatt deployment. Okay, so very interesting, of course. As part of this deal, OpenAI will also take a stake of 10% on AMD, so roughly 10%, as I understand it. So obviously this is pretty significant, guys. Basically, a lot of people have been talking about the kind of circularity of some of these AI revenues, and we can't deny that this is something that is definitely taking place here. Now, of course, on some extent, it makes sense, to align their interests, obviously, and we know that OpenAI has done this with NVIDIA. But we also have to understand that this does mean that AMD investors will get diluted to the tune around 10%. Now, overall, is this deal going to be accretive? I think so, of course, for the time being, and obviously this is the way the market has received it. The stock is up about 27%. And I mentioned that I believe AMD could reach $1 trillion valuation, by 2030, and this only accelerates my belief, of course. So I recently I just wrote an article on this. This should be out quite soon. But basically, if we look at this table here, this is kind of an estimate I made already on the trajectory of AMD revenues. So now I've updated that based on the latest OpenAI deal, which makes me believe that ultimately by 2030 AMD could be looking at achieving about yearly revenues of about 110 million just from data centers, putting total revenues somewhere in the ballpark of 126, 144 billion. Okay, so very significant. And if we actually look at this in terms of valuation, even accounting for the 10% dilution, and assuming this, this assumes operating margins about 45 to 50%, and in data center about 25-30% overall. So we'd be looking at EPS by 2030 of about $15. That would be the base case, and ultimately, again, depending on the P multiple you apply, but I think anywhere between 15 35, taking 2025 as the base, our target for AMD by 2030 could be north of about $775. This is about 1.37 trillion valuation. Okay, again, this seems pretty doable right now, given the current dynamics in the AI market. Obviously, like anyone, I'm also, we have to be a little bit concerned about what OpenAI is doing here. But again, you can't look a give horse in the mouth, right? We have been on the right side of this AI trade. Understandably, some of you could be getting a bit nervous about this. So, I wouldn't fault anyone for taking some profits. Personally, I think that, over the next few years, this still has some room to run. Especially because ultimately I don't think that we're quite topping in the market, at least not in the longer term. Perhaps in the shorter term, that's a possibility, right? I mean, obviously, a lot of what's going on right now with AI related to OpenAI, it's kind of interesting. Obviously, how this company that doesn't really have any revenues is going to actually pay out all these multi-billion-dollar deals, including Oracle. Now we have AMD. So obviously a risk factor, but we can't deny that the potential that AI has, and ultimately I'm still quite bullish here. Okay, now does that mean we can't see a pullback? Obviously, people are getting worried about the market. It is getting frothy. Okay, if we look, for example, at this chart of the stock market, this here looks at the stock market compared to M2, so that's a measure of money supply, and it's reaching about 300%, and we reached about close to about 350% in the dot-com bubble. Again, perhaps indication that we could be close to some kind of correction. Obviously, I do believe that there is some degree of an AI bubble, but I do think that we are potentially not there yet. Okay, so obviously everyone's still very bullish, and I have talked potentially about the AI recession, and I do think that will be the most important thing to look at now, will be the energy demand, right? And I think that will be the limitation, potentially the limiting factor here, because obviously we have a lot of bullish, views on data centers and their output, but I think this could be limited by power demand, right? So we need power demand to keep up with all these things. This is one of the reasons why we also invested in nuclear stocks, which have done very well. But ultimately, I did the other day talk about, some anti-AI stocks you could buy to defend your portfolio, and, obviously Google being one of them. And also just wanted to share this chart here, which shows how Gemini has been gaining some ground against OpenAI in terms of, generative AI traffic share. So gaining some ground there. Google, obviously one of our favorite stocks right now, pushing all-time highs, and just all round a great stock to own, even if you don't, whether whether AI works out or not. I think, in the event that there was some kind of an AI recession, Google could do very well, right? But with that said, obviously, things are looking a bit frothy, and I wanted to dive into the Trendspider chart right now and look at some of our main indexes, right? So first off, looking at the SPX, we're going to look here at the weekly chart, and I'm not going to deny that if we look at the technicals here, does it look like a reversal could happen pretty soon, and I will say, we do see a lot of bullishness now going into Q4, especially from the crypto world. There's this expectation it's October, then we'll have, of course, you get your Santa Claus rally, so there is a lot of bullishness now. It isn't fully reflective, right? If we do look at the fear and greed index right now, it's not euphoric yet. We're sitting, we just kind of moved into greed, so there's still some skepticism in this rally, which makes me think it still has legs. However, we can't deny that, at least from a technical perspective, we are seeing some toppy signs. Okay, so for example, we have this pretty significant divergence in the RSI. An RSI which on the weekly is approaching overbought levels. Obviously, we saw how we got overbought here, led to a sell-off. We got overbought back here in July, led to a sell-off. and we're just about getting overboard now and potentially forming a pretty significant divergence. Also notice that we're kind of running into this pretty significant trend lines above, right? So this is a trend line. This is one of the trend lines that Trendspider creates automatically for us, which are very handy. This one comes from back here, kind of going over the top in 2022. And basically, that's kind of where we're hitting our heads right now with the SPX, okay? Now, also, if we take, for example, we look at the 2022 bear market and measure that in terms of fib retracements, we can see that we are nearing that 2.618 extension. That gets us to about 6,800, and again, I think 6,850, just around here, maybe just south of 7,000 could be a very interesting point, at least for a reversal. Okay, and the same goes for the Nasdaq. Okay, guys, we are approaching some pretty significant resistance levels again. Nasdaq on the weekly entering overbought territory, forming that divergence. I would say in the medium term, I'm getting a little bit bearish, and of course, there's a lot of signs right now that are showing obviously, like I said before, the fear and greed index isn't quite at extreme greed, so I do think maybe there's some more room to run maybe in the next month, but I do think maybe towards the end of the year we could get a little bit of a pullback. Okay, we've been seeing a lot of just very speculative names begin to run. One of the ones that I like to track is Plug Power. Of course, if anyone remembers Plug Power, this was an absolute darling back in the 2021 rally. Kind of the hype of that speculative mania, and obviously since then it's really come down. But obviously, if we look in the last 1 month, it's up 170%. Everything is rallying. Okay, let's see how OpenAI is doing today. OpenAI opened, all right. Okay, flat for the day, but of course, we've been seeing very significant rallies in these. In just a lot of speculative names, while we're kind of approaching a moment which from a technical side it's kind of delicate. We're also approaching a point that, where I think basically, while I do think that overall we are looking at maybe a bit more bullishness longer term, in the shorter term at least, there are some factors that are making me a little bit more bearish, right? One of them is the fact that I think it's pointed out in this article that liquidity is running a little bit thin, pointed out here by Mod Capital, or how I like to call it, Bear Capital Management. Great analyst, but probably a little bit too bearish in my opinion. But he does make some good points, and one of them is that reserve balances are coming down. So this could be a little bit of a problem. Something that also has been pointed out recently by Cross-Border Capital, Michael Howell. He's been on the podcast before. Great, obviously great analyst. And he's pointed out also that we could be, if you look at the repo market, we're getting some interesting signs that that there's a little bit of stress going on there. This is also pointed out here. We're seeing a little bit of a spread begin to appear in the overnight funding cost and the SOFR, which is trading 11 basis points above the Fed's effective funds rate. Okay, so perhaps a little bit of a liquidity strain. So again, while I guess in short, what I would say is that while I think that there's room for the bull market to keep going, I wouldn't be surprised to see some kind of liquidity event, which is kind of basically what we've been seeing. That's kind of what happened. If we look back at what was this? Well, that's a bit too long ago. This is the weekly chart. What was it? Well, we had we had August. What was it? August 2024. We had that big liquidity event. Obviously, we had April. I think there's room now for some kind of an event that could be similar, right? So again, looking for maybe 5-10% correction. Again, in terms of assessing this, to me, always, relying on our market beating algorithm, that's kind of what's going to tell us, how to stay on the right side of this. And of course, if we did see this, this our algorithm pull us out of the S&P, I would start getting a little bit more worried. Okay, for the time being, we're still long here. One thing I've been doing is now also looking at the 2-hour chart. On our market beating algorithm. So this gives us this is of course a bit more sensitive. So it gives us a little more ins and outs. So again, if on the 2-hour we did see some kind of a reversal, I would if we did get a sell signal there, I would start to think, okay, maybe it's time to start reassessing the market right now. But ultimately, things are still looking pretty healthy, right? Again, the other one we can look at is Bitcoin. This is also an interesting one, which again, I have some mixed opinions about, because again, everyone is very bullish on Bitcoin right now. And you know me, I'm a little bit contrarian, right? When everyone gets so bullish, you might want to start thinking about things. And again, we're running into some very significant resistance. Again, we have this trend line here coming from those previous tops that kind of is limiting the upside right now at about 125,000. Obviously, we're also coming up to the 2 extension. So again, and obviously huge bearish divergence here. Now, again, doesn't necessarily have to play out, but ultimately, we are seeing a pretty similar scenario as we saw here. In fact, we can see here the last bear market kind of topped. That was April. This was a little bit earlier, February, and this the last bull market topped around October, November. Okay, and that's pretty much where we're at now. We're entering into October. Sentiment is getting quite bullish again. I think, honestly, again, we're not quite there yet. Again, the fear and greed index isn't quite there yet, but I'm seeing a lot of complacency, a lot of people being a little bit too bullish. So I do think that there's definitely the potential to begin some sort of a correction in the more immediate term. In the longer term, though, of course, I do think that because of some of the dynamics we mentioned a couple of weeks ago, about passive flows and just generally the current administration's intent on running the economy hot ultimately, and doing that through fiscal stimulus, I have no doubt that there's going to be a lot of stops being pulled out into the midterms, which of course will be quite determining. And those will be sometime next November, if I'm not mistaken. So that's about a year away from now. So it's going to be quite interesting. I think statistically, if you actually look at how markets perform going into midterms, they tend to underperform. So it's going to be interesting to see what happens in that regard. Now, moving on to just to wrap up, I also wanted to discuss some specific stocks. So I wanted to run our market scanner here and look at some interesting stocks that we can have on that we should keep an eye out. Well, first of all, obviously AMD. Just wanted to point out, of course, the stock that obviously this stock has been on our radar for some time. And this is actually the last stock that we added to our AI portfolio. Obviously, it's a stock we have in our YOLO portfolio, and you can see here that our algorithm actually got us into AMD, or back into AMD near these recent local lows. So again, we added that to the AI portfolio. So that was a pretty good add. Obviously, not that our algorithm predicted the move, but it did give us. We knew that AMD was something we were interested in, and our algorithm gave us a good technical entry there, pointed out that entry. As we can see, the algorithm backtests really well. So again, obviously, if you want to check out the algorithm, if you sign up to Trendspider, you will, using our link, you will get you will get access to our Trendspider algorithm. And of course, if you do that, you can also get a substantial discount to the AI Trend Trader. Now back to our market scanner, we wanted to look at some other interesting stocks right now. So what we'll run now is our scanner. So this is pointing out some stocks that based on our algorithm right now we'd be interested in buying. Amazon, okay, very interesting. Obviously, Amazon stock I'm very bullish on generally, and it's been coming down significantly, and it's now hovering around that kind of 4-hour 200 EMA, but slowly kind of making higher highs. MACD just crossed over, so definitely not a bad time potentially to add Amazon again. So we're a little bit above that 200 day EMA, so definitely something to consider. Some other interesting names we have here, for example, Lululemon. This is an interesting one. I actually covered this on Seeking Alpha. They had some pretty bad earnings. I would say the encouraging thing about it, based on what I saw, is that their China sales are doing pretty well, and but based on the technical outlook, it does look kind of interesting here. We've seen a little bit of a reversal here, with that low being struck at around 150. So it's definitely interesting, and obviously we've got the MACD curling up there. Obviously our algorithm had us going long here. Obviously it's come down substantially since then, but nonetheless, if it didn't have us long, it would have triggered a long here based on the MACD. So Lululemon, definitely another interesting name you could consider. Another stock that I wanted to have a look at, just because I'm not really sure what's going on with it, is Mercado Libre, Meli. This again a stock that generally I like quite a bit. We have this in our long-term portfolio. It's come down substantially since it's actually broken below the 200-day EMA. There's been some news outlets, some news about Amazon making a bit more of a push into their area. Ultimately, though, again, still looks pretty good. This is a kind of area, we have the 200-week, not the 200. This would be the 50-week EMA here. It's an area that Meli likes to test out. So again, I would expect this to bounce from here, and wouldn't be bad in terms of our. Let's see what our market beating algorithm would have us do here on Mercado Libre. It did have us exit over here. But again, I do think, if we actually look at, the chart here, we can see, a slight kind of, you could say there's a bit of a bullish divergence here. RSI making a higher high over here, while this makes a lower low. So, not a bad potential trade if you ask me. Obviously, not too bad. And again, a stock that generally, obviously it's expensive, but, I do like the stock quite a bit on the longer time frames. And the other one that I wanted to look at is SoFi. Again, this is a stock we have held before on our portfolio. We did sell it, and obviously it's come down substantially. I do think this isn't a bad this is potentially a good place to add as well if you're looking at getting some exposure. Again, if we look at the daily chart, we're kind of bouncing off that 50 MA, so pretty interesting over there. And by the way, if you're wondering what these red lines are, this is the capitulation finder. It's an indicator made by Trendspider. Again, one of the reasons I really like the platform is you have all these custom indicators that they've created, as well as just tons of other different ones. One of them is the capitulation finder, which uses different moving averages to basically try and find either capitulation spots, both in terms of the upside, basically tops and bottoms, basically. And you can see it works with some accuracy. For example, here if you look at on the 4-hour chart on SoFi, gave us this signal here, gave us some good buying signals here. So definitely worth checking out. And something that I'm looking at developing a bit more moving forward is some indicators, right? That's another one of the cool things you can do. Other than building strategies, you could also build custom indicators. Probably should do a video explaining a little bit about how that works. But again, guys, definitely check it out if you haven't already, because Trendspider, pretty useful tool. And if you sign up, you'll obviously get our algorithm and of course anything else that that we develop in the coming weeks and months. Anyway, guys, I'm going to leave it at that today. So ultimately, very good news for our portfolio with AMD taking that big leap. And obviously, although the market is looking a little bit toppy, I do think that we have some room to run. We're not we are running a little bit on fumes. We're seeing some kind of overhyped kind of attitudes, let's say, in the market. Some stocks which shouldn't be rallying, which are rallying. But ultimately, I still think that there's some room to run here. And we just gotta keep an eye on things, right? Again, the easiest thing right now is I'm just gonna trust our algorithm here, and for now it's keeping us long. And obviously, if this ever pulled a sell signal on us, obviously that would be our first sign to really kind of get out of the way, right? But ultimately, what's been working will continue to working. Just to wrap up, maybe have a look at gold. Goodness, gold is now, I think it's pretty much approaching 4,000 almost. I mean, it's pretty insane. Again, looking a little bit toppy here. Again, huge, pretty significant bearish divergence here on gold. But so maybe not the best time to add now, but ultimately, again, a symptom, of kind of the ideas that we've been expressing, which is that, ultimately, where the debasement trade, so to speak, is just full on, right? You know, Going into 2026, I think that's kind of going to continue to be the trend, right? Dollar potentially down, and again, if you look at the S&P 500 based, if you compare it to euros, it's not even at all-time highs, or I think it's just about breaking all-time highs again. But again, this is just one of the reasons why markets keep rallying, right? And yes, we can find a million reasons to sell right now, but ultimately, I just don't think, it's the trend is on the upside right now, and you got to stay with that trend. That's kind of what we're doing right now. Okay, guys. So thanks for listening and tuning in. Again, make sure to check out the YouTube if you haven't subscribed yet. AI Trend Trade. We're also on Substack. Check out the newsletter, and if you haven't already, check out Trendspider. And we've got a lot of cool things coming this week. Also at the Pragmatic Investor and here on the AI Trend Trade, we'll be talking about investments where we'd be. I'm going to start doing every month now. At the beginning of the month, I'm going to do 3, 4, 5 investments where I put $10,000 every month. So that's going to change, of course, based on where stocks are at the beginning of the month. Just like kind of if you were just dollar cost averaging at the beginning of every month, kind of my main the main stocks that I would look at buying. And we're also going to be discussing a little bit more on the macro side, and I'm also going to be talking about a new sector. Obviously we've had AI, we've had quantum computing, and I'm going to be talking about what I think could be kind of the next big area of explosion in the market. Big area of interest. Especially I think with AI and technology, an area which I'm personally very interested in, and which I think obviously I think we could see some of the stocks in this I guess you'd call it sector do very well in the coming months. So stay tuned, subscribe if you haven't already, and see you in the next one.